Mohamed, let's just begin with your view on that payrolls report.
Clearly weak, but it's not a disaster. And it's not a disaster because of what Rick said. If you look at 3-month moving averages on job creation, they're still okay. If you look at wage growth, 3.1% is still good given where inflation is. However, it is significantly weaker than certainly I expected, and it adds to what you've heard consistently from your guests this morning, which is the case for an insurance cut is getting stronger and stronger.
Do you endorse that case for an insurance cut, Mohamed? Is that something you think the Fed should do? We'll talk about what they will and won't do, in your mind, your opinion, but do you think it's something they should follow through on?
So let me just say an insurance cut is not the 75 to 100 basis points priced in by the market. And that's important. You know, there is a risk even under the scenario of an insurance cut that markets are disappointed. Look, I personally don't like a situation where the Fed is being forced by markets to do things, and that's been the story, unfortunately, of the last few years. But I've become more sympathetic to an insurance cut because of Mexico. Jonathan, what happened last week with Mexico is, in my mind, significant for two reasons. One, this was a done deal going to parliaments and it's been reopened. Two, it's been reopened in terms of tariff threat for non-economic reasons. So it signals to the rest of the world and it signals to U.S. industry that we've weaponized an economic tool. And even if we walk back this threat, we still leave an element of residual uncertainty that will impact both consumption and investment. So that is why I myself am more sympathetic to a notion of an insurance cut than I was just 2 weeks ago.